shares of AMC Entertainment Holdings, the movie theater company, is in the news again this week, and I just wanted to give a couple of words on this for perspective and what the risks might be that the stock actually does go to zero. Remember, this was one of those stocks, maybe those call them meme stocks, during the 2020-21 stock market, I guess mania is the best way of putting it. And they've tried many things to kind of prop the stock up, but at the end of the day, here is some of the realities that this company is going to still have to work with. And what I did is I just brought up the income statement, and if I scroll up a little bit more, hopefully you can see this. What you'll see is that this company essentially is just losing money, and they continue to lose money. Net income, just going back to 2017, this is before taxes, but it's more or less the same number. I mean, they've been losing money since 2017, and nothing's really working. And so we have to just be mindful of what the fundamental realities are of a stock like this. If we look at the debt, and this is an important thing to understand about a company like this, particularly as we've now had the cost of debt essentially go for probably more like 10x. It depends on what we're in the capital structure we're talking about. But this is a company that has quite a bit of debt outstanding, considering the fact they're not making any money. They have a little bit of debt due basically in 2025, but really in 2026, they have about $1.5 billion worth of debt due. And this is kind of where potentially some refinancing issues are going to come to fruition. And some of these bonds are really trading really poorly. So one just has to be aware of that. In terms of the stock itself, just quickly, in terms of where we think it might go back to, I mean, I see no reason why the stock doesn't go back to where it was essentially, through the pandemic. So basically down to $1.25, $1.50. That's basically from here about 75% lower. So these are the kinds of these trades are fairly difficult shorts in the sense that they can be very volatile and they can take time for this company to go to zero. But the odds are quite high that ultimately it just doesn't have a viable business anymore. No one wants to buy. It's got too much debt, and so on and so forth. So just keep this in mind, and I wanted to throw this out as a cautionary note that the time during the pandemic when we had this sort of free money period is over, and a lot of these credit problems are going to come to fruition, not just in AMC, but in a lot of other companies in 2023, most likely. AMC is just a poster child of that. I hope that helps for some perspective, and with that, have a very happy holiday season.